Hey guys, Mike here again. I wanted to do a quick video on Seritage, which is a company I purchased over the last few trading days. I actually didn't expect to be a Seritage owner, but one of the ways that my investing works is I research companies, and then if I feel there's a price where they become uh, far too cheap, I'll have a note on my watch list that tells me when it falls into that range. And so I was researching Seritage like last summer. I don't know, maybe June or July, August, that range. And I put a note on my on it to say that if it falls back into the range of like below $10, that I'd take a hard look at it. I liked the investment thesis back then, but it just wasn't cheap enough for me to feel like I was getting a really strong value out of it, or really a safe valuation, I guess I should say, because there's some risks to the company, so I wanted to be extra safe. One of the reasons I put my buy range at below $10 is because that's where I believe Manish Pabrai bought it back in April, whatever, maybe it's not April, in Q2 2020, so after the COVID crash. He bought 12% of the company in the second quarter, and the range that he bought it at was somewhere between 650 and about $12. And just looking at the charts, there weren't that many days that actually traded below $8. And I'm doubting that he bottom ticked this thing and bought it right at the bottom. I think there's 3 days or 4 days that were below $8, and he bought a lot of shares. So I'm doubting that he's the one he bought. Like he was responsible for all the trading in those 4 days. So I think his range is probably at least $8 that he bought at, and that gives me a level of confidence, because if I know the level of research he does, and if he's that confident to buy 12% of the company, and he still owns most of that. He owns. I just saw that he sold about a quarter of his shares in order to transfer to a different company, which is Tencent. So he likes Tencent better. So he moved some of his money from Seritage to Tencent, and took a gain. Looks like he basically doubled his money, and then he pulled some of it out and put it in Tencent. But he still owns quite a bit of the stock. He's about 9% of the overall company. So that's a pretty good vote of confidence for him. And if I'm buying in the same range as he is, that helps me feel even better about the purchase. Outside of my own analysis. So I guess quickly on what Seritage is, they are a company that was originally a real estate investment trust with a bunch of Sears locations, and Sears would pay them rent. But since then, Sears has gone bankrupt, and so what happened is they ended up with this huge portfolio of properties, and they had other tenants as well, but primarily it was Sears stuff. And so what they're doing now is they're still considered a real estate investment trust, but they're not like a normal trust that pays out a dividend and stuff. Right now they're in the process of building up the properties, redeveloping a lot of them, selling some to fund the redevelopment, and then they're releasing those to new tenants at a much higher price than they would have rented to Sears. I think Sears was around $5 a square foot, and now they're renting it. They redevelop them and rent them at, it seems like the average is about $20 a square foot. And on top of that, they have, I think it's 7 premier properties that they're really developing. So they have all these, they have residential units and life sciences and all this kind of, they're doing basically mega projects with 6 or 7 of these, which is adding even a lot more value. But those are longer term projects that come online in phases. So in terms of my quick thesis here, I like I said, I'm not done researching this, but the price fell so low that I'm kind of doing this backwards. I'm buying these shares before I've completed my research. And then if I finish the research and I think, oh, this isn't actually as good as I thought it was, then I'll sell them again. But I wanted to lock in the price around $9.40 is what I bought at. But the valuation, or the thesis in a nutshell, is that this is an asset play. I've seen multiple valuations from this company, and I'll put links to them. Invest with Tom and Brad Kellner. Matt Peterson has some good info on Seritage, and they're all coming up with property values. If they add up all the properties with the best comps they can find, is somewhere between $3.5 and $4.5 billion, and that's liquidation value if they're forced to get rid of everything. So if you take, let's say, 4 billion, or let's take the low end, it was about 3.5, and they have about $1.5 billion in debt, including the preferreds. That means the properties are the net value after you pay the debt off is worth about $2 billion. Now the whole company right now is trading at $450 million. So it's trading significantly below those valuations. And even if those guys are quite off the mark in terms of their valuation, or the market goes to hell and we get another 2008 type scenario, you still have a massive margin of safety in terms of the property value. And so right now, my basic idea is that I'm buying $1 for 25 cents. So I'm buying $1 of property value for 25 cents in cash. And the upside I get is, if the management's plan works and they're able to redevelop these properties well and achieve their goals, the value of the company will be far higher than $4 billion in terms of the overall property values. So it's a situation where I feel like, even in a worst case scenario, in a bankruptcy, I don't think I'm going to lose money here. And if that's wrong, then somebody can write a note there. But it looks like even in a liquidation, you probably have at least 2 or 3 times the upside here. Whereas on the upside is even higher than that in terms of where they'd be in 2024, 2025. So the way I'm looking at this is, in 2 years, we're going to get a really good indication of whether the management has been successful. And if they have, then the rents will be far higher. The other thing that will happen is, if the rents are far higher, then they'll be able to negotiate a lower interest rate on their debt. So right now they're paying 7% on their debt, and which is a fair chunk of money. So it's about $100 million a year. So even if they knock that down to 4%, then that saves them a fair amount in interest each year. And just finally, one thing I did look up before I came on here was, I was looking at the compensation package for Andrea Olshan, the CEO. And one of the things that I noticed was, or the main thing that I was looking for that I noticed, was that her base salary is $1 million a year. But she also has equity compensation up to $4 million, and they'll just price that based on whatever the stock is trading at, but up to $4 million in equity. So that looks like it vests over 3 years. There's 3 different anniversary dates where she can earn that in 3 chunks. So I really like that the CEO looks like she's incentivized to get the share price up, as opposed to just sitting and collecting a salary. So yeah, that's a little bonus. I didn't see that on any of the videos that I watched or any of the research that I looked at. But yeah, from what I've seen in terms of her and her attitude and her transparency as well, she really just throws everything on the table so the shareholders can see what they're investing in. I've really liked what they've done with what Seritage has done with the CEO position, and I think Andrea looks like a really good fit there for us as shareholders. I'll do more videos. Yeah, that's it for now. I'll do more videos when I'm complete my analysis. I'm going to look at each property myself and see if I agree with the valuation that these other guys did. But I'll also put a link to the videos so you can watch their stuff, so you can see where their valuation came from. Yeah, this investment doesn't seem like it's for everyone. It's a very it's negative cash flow. There appear to be risks. It's not a slam dunk, but the upside looks like it's multiples of the current share price. And I think actually, before I go, I'm just going to quickly talk about some risks. So a few of the risks that I see here, the main one seems to be just if they don't execute well and they take years longer than expected to complete these projects, that would burn a lot of cash, and they're already at a fairly significant cash burn right now. So they need these projects to come online quickly to become cash flow positive. So that's what I would say is the main risk. The bankruptcy risk doesn't look like Berkshire. They owe the money to Berkshire, by the way, their debt. But it doesn't look like Berkshire is the kind of tenant or the kind of lender that's gonna foreclose on them. It looks like they might just have to update the terms of the deal if things went the wrong way. And incidentally, it looks like Buffett still is a shareholder from 2015. He doesn't own that much of the company, 2 million shares, which is basically nothing for him. So 2 million times $10 or so is not so $20 million. That's a drop in the bucket for him. But he is a shareholder, and Berkshire is the lender. So they're involved in some way, which is, I think it's a positive. Let me just look here. What other risks do I see? We have macro risks. So if interest rates go up, that tends to hurt real estate. So the value of these properties, if the interest rates went up to significantly, you might have a situation where these liquidation values come down. Or you would definitely, because their real estate value is directly related to interest rates. So that is a near-term risk. Although I don't think that any of the central banks around the world have the ability to raise interest rates very much, because there's quite a lot of debt in the system right now, and most Western countries have excessive levels of government debt. So the central banks wouldn't want to bankrupt their own governments by raising interest rates too high. The other risk is persistent inflation. So if we get inflation on the building side of this equation, then that could eat a significant portion of the upside in terms of this investment thesis. You might argue that on the other side of that, if there's inflation, it's going to benefit them on the sales side as well, be able to sell the properties for a higher value. But if we just look at the risk side, yes, the inputs might continue to stay high. All the input costs are up 20 to 30% right now versus 2 years ago. So that could put a damper on the story. Yeah, I think that's all I want to talk about today. But I just wanted to do a video on this purchase because I did make it over the last 3 days, and it was somewhat unexpected, or actually totally unexpected. I just realized, I looked at the stock and I'm like, oh, it fell 20% in the last 2 weeks, and it's in my range now. So I'm unexpectedly a Seritage shareholder now, and I'm going to be diving into this every day until I feel like I understand it inside out. Thanks for watching, and if anybody wants to put comments and ask questions or tell me where I'm wrong in this thesis, please feel free. And again, I'll put some links to some good analysis from some other guys on YouTube in the description. Thanks.